So you're thinking about buying your first home, but worried you might not have enough savings? Trust me, you're not alone. It's a super common concern for first home buyers. Saving for a deposit can feel tough, especially if you're juggling rent or paying off things like HECS or help debt. But don't stress. Today, we're breaking it all down and giving you insider tips to help you get into your first home faster. Let's jump right in. First off, let's talk about what banks want to see. They'll usually ask, do you have genuine savings? So, what is considered genuine savings? Well, it's about how consistently you've been saving over time. For example, if you've been putting $400 a week into a savings account for the past 12 months, that's genuine savings. It shows the bank that you're disciplined and can manage money well. On the other hand, if you've received a lump sum, maybe from a bonus, an inheritance, or a tax refund, that's considered non-genuine savings. But don't worry, you can combine both genuine and non-genuine savings. The key is to show at least 3 months of consistent savings. So start squirreling that money away and, if possible, keep it in a dedicated savings account. Here's something you might not know. Some banks will count your rent payments as a form of savings. So if you've been paying rent regularly for years, banks see this as evidence of good money management. After all, once you own your home, you won't be paying rent anymore. So your rental history can work in your favor when applying for a loan. Now let's clear up a big misconception. You don't need a 20% deposit to buy a home. You can buy with as little as 5% deposit, but keep in mind that if your deposit is less than 20%, you'll usually have to pay something called lender's mortgage insurance, or LMI. LMI is a fee you pay if your deposit is under 20%, and it protects the bank, not you. But here's the good news. If you qualify for the First Home Loan Deposit Scheme, the government can cover the LMI for you, saving you thousands. And if you're a single parent, you might even qualify to buy a home with just a 2% deposit under the Family Home Guarantee. You can find out more about these schemes on our website, mintequity.com.au, as we have comprehensive guides available that explains all the details and eligibility requirements. Now let's talk about guarantor loans, aka the bank of mom and dad. If you have a family member with equity in their home, they can use it to guarantee part or all of your deposit. For example, let's say you have 5% saved for an $800,000 property, but you'd like to avoid paying LMI. If your parents can guarantee the remaining 15%, you'll reduce your loan-to-value ratio, or LVR, to 80%. That means no LMI, and you'd save up to $35,000. The best part? Once your property gains enough equity, your guarantor can be released from the loan. A proactive mortgage broker like us at Mint Equity can help review your property's value regularly to make sure you're on track. Here's the thing. Every lender has slightly different policies when it comes to savings, rent, and even things like guarantor loans. That's why working with an experienced mortgage broker is so important. At Mint Equity, we've got access to over 50 lenders, and we know exactly how to match you with the best loan for your situation. Plus, we're here to guide you every step of the way, from saving for your deposit to settling into your dream home. So, if you're ready to get serious about buying your first home, let's chat. We'll help you navigate all the tricky stuff so you can focus on what matters: getting the keys to your very own place.